Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is Monday. It's the 9th of October. My name is Russell Shaw, and I'm a senior market specialist at FXCM. Just want to draw your attention to my email address, rshaw@fxcm.com. I'll reply to all emails. It just might take me some time. If you find there's a lag, just check the spam folder. Sometimes my messages go through to the spam, so just double check that. Here's the high risk investment warning. I just want to keep that on screen for a few moments, and then we'll put in the market commentaries disclaimer. Good morning, James. I had a good weekend. I trust you did as well. Good morning, Raj. Good morning, Kim. Thank you very much for joining this morning. Thank you, everyone that has signed in this morning. It is much appreciated. I am going to bring up the market commentaries disclaimer now. Hi, Michael. Good morning to you. Pleasure to have you on the webinar as always. Okay, and just our references, MarketScope 2.0 and TradingView. I'll bring up TradingView. This is the daily chart, but this candlestick is of Friday. There's a public holiday in the US today, so just be aware that there's probably going to be lower liquidity today. It's Columbus Day. There's also a public holiday in Japan, and there is a public holiday in Canada. I think it is their Thanksgiving. So by and large, I think liquidity affected today, so just bear that in mind. What I want to do is, of course, just point out the fact that the real rate is overbought, but we do have complexities. We've got this sad situation that's unfolding in Israel. Let's just fix up this. And what's the most direct effect? What's happening in Israel is actually seen in the oil market, and you can see that this is the Brent crude. This is the opening of the oil market, and it's sparked up. Whilst there's no pipelines that are going to be affected, the thinking there is that sort of the conflict can broaden, including Iran and US, in some sort of capacity. And what's happened is that the oil price has sparked up, and the oil price sparking up has a direct effect on headline inflation, not so much on the core inflation. But if headline inflation is going to be picking up, then if we go back to the real rate, we probably stay overbought for a time longer. And if we stay overbought some time longer, maybe there's going to be some sort of dollar effect. There's some sort of support in terms of the dollar price. So let's go through and take a look at bearing in mind that oil market has sparked up. Before we look at the dollar, let's perhaps just do a broader analysis on oil. You can see that last week we had a huge sell down in oil, huge sell down. What was really driving that sell down in oil is what we call demand destruction. Basically, the theory behind demand destruction is that the high price of oil caused by the supply constraint actually becomes an impediment to the demand. It becomes too expensive, and the demand side of the economy starts suffering, and that's kind of what we've seen happen last week. And then, of course, the movement up here because of the events over the weekend, you see this big spike up, and we're just looking to see if there's going to be a higher trough here. We still are in zone 3, but I think the longer this drags on in Israel, and the I think the potential of it just embroiling other regions. Let's just watch the oil price very carefully here. Let's go down to the US dollar, see if that is supported. Remember, the dollar is also a safe haven. Okay, it's also a safe haven. When there is a element of risk off, money tends to try and find the safest destination, and the dollar tends to be the haven of choice at the moment. And what we have here, I think, is again, it's a complex picture, because now that we've got the spark up in the geopolitics, that's really the underlying driver at the moment. And last week, you can see we actually had the dollar was driven up. Okay, a large part of the dollar being driven up was that very robust reading in the non-farm payrolls. Funnily enough, it actually came down. It was a gravestone doji in the end, so some sort of selling pressure. But again, money now starting to rotate towards the dollar because of safety, because of the safe haven. If we go through to the daily chart here, you can see that it is trying now to reestablish itself in zone 1. Now we've got, I think, quite a complicated day ahead of us. Let's just unpack the complications. The first complication is there's going to be a liquidity issue. Okay, there's a public holiday in Japan, the US, and Canada. So that's the first issue. The second issue, of course, is the geopolitics now coming into it, which I think is going to be driving markets more so than the technicals. And we're starting to see the dollar move from zone 2 into zone 1. And it just seems that that may be the sort of logical allocation of capital, given the uncertainties that are starting to emerge. Remember, uncertainty is another name for risk in the financial markets. So if uncertainties are rising, then risk is rising. As traders, your first job as a trader is to manage risk. That's your first job. And today is a day that risk is rising. Geopolitics combined with less liquidity in the market, got to be very careful out there today. Okay, it's moving from zone 2 into zone 1. Let's take a look at this on the hourly chart. Okay, let's clean this up. Let's clean this up and start the analysis from the beginning. All right. Take a look at how the dollar looks at the start of the day. First of all, trend following indicators have crossed bullishly. We've got the green 5-hour exponential moving average on top of that 10-hour exponential moving average. If they start developing angle and separation to that northeast, then we've got a momentum behind it, don't we? Secondly, let's take a look at the stochastic. The stochastic has crossed bullishly as well. So we've got the two triggers here in the US dollar. What's the US dollar? It's a safe haven, and there is one would feel almost a necessity to move capital into safety at the moment. And if you take a look, this is the next area to keep an eye on. If the stochastic, if the dollar's stochastic moves into that upper quintile and holds, then it seems to me that the dollar is swinging to the upside. If the dollar is swinging to the upside, it potentially means there's pressure on the majors because dollar is rising. So we probably see pressure on the euro. We probably see pressure on cable. And I would expect pressure to be on the risk markets as well. Why? I think we're getting hit from specifically two sides: dollar safety, oil prices, which are inflationary. Okay, so let's be very cognizant of that. So you can see the dollar starting to show signs of demand at the beginning of the day. Let's take a look at the euro. Let's take a look at the pound. Let's see if we see contra signals on those two. So let's just bring up euro. Okay, again, let's get rid of all of the line studies previously and re-look at them. Relook at the euro. So let's just take all of this out. Take this ellipse out, rectangle out. Okay, take a look how the dollar showing signs of support. Well, that is putting pressure on euro. We've got a bearish cross on the exponential moving averages. The green, the 5-hour green exponential moving average, dropping below the orange exponential moving average. And then we've got the stochastic crossing down. And we've got this lower quintile to keep an eye on. If the euro moves towards that lower quintile and holds, we should see a swing to the downside. Raj asking a very good question. I'm not sure I have an answer for this question, Raj. I have to give it more thought. This is Raj's question. Post NFP, the dollar lost more ground than the gain. What's my view? I think that's an excellent question. I was quite surprised. So what happened? The NFP was dollar positive. When we traded it, we traded the dollar positive. We traded euro down. Then what happened is that the dollar lost ground and the risk market actually closed up for the day. I'm going to suggest, Raj, that it could be sort of a buy the rumor, sell the fact type of movement there. But I have to give it more thought. So this morning is something that I want to just sort of ponder this because it is a contra market movement. I think everybody was preparing. I think everybody was preparing for the stronger dollar, and then once the news hit, they sold and took their profits. I think that's what's happened. Subject to correction, Raj. Great question. I need to ponder it some more because the markets did end contra to what I was expecting. No doubt about it. Okay, but I do think it's probably attributable to a buy the rumor, sell the fact. All right, let's just take a look at cable. Let's take a look at cable. Again, let's just clean this up, guys. Let's just clean it up. Okay, there's a lot of line studies here. Let's just get them all out. Perfect. Okay, again, remember the thesis that we're operating on. There is a risk off sentiment. Money looking for the safe haven. What's the safe haven? The dollar, potentially supporting dollar up. Not only safety, there's also this movement in inflationary pressures, heightening that risk. Again, if risks increasing, the lure of safety becomes more compelling. We've got the bearish cross here in the exponential moving averages. We've got the push down in the stochastic. And if we head towards the lower quintile, it looks as if we get the swing down. Okay, does everyone understand the hypothesis we're working off this morning? Okay, and it's quite a complex sort of situation because I think it's going to evolve quite quickly. So let's just kind of keep our heads to the ground. Um, okay, Raj, have a good day. I'll speak to you tomorrow. Let's take a look at gold. Let's take a look at gold. Gold typically moves antithesis to the US dollar. Now, what's interesting here is gold's hold its own. Let's just do a top-down analysis here because gold is holding its own. Again, perhaps gold's also an instrument of safety. Perhaps that's got money sort of being attracted towards the yellow metal. There's some sort of attraction. Let's just do a top-down analysis here, just to make sure we kind of get a broad view of what's going on with gold. So we go through to the weekly chart here. We do see this lower peak, lower trough, lower peak, lower trough. It does look to me as if there is money going in gold as an element of safety, okay? But between gold and between the US dollar, my opinion is the dollar is the haven of choice, okay? So some sort of movement up here in gold, I am a little uncomfortable with that. Just be aware of that. It is moving, gold is moving upwards as risk increases. I think we've got to be very careful here. It's had a very broad movement all the way to R2. I'm not sure how much more is in it, and I would be very nervous if the dollar continues to move up. Then I would expect some sort of pressure to become emerge on the precious metal. So just be very careful with gold. I'm not too comfortable with this chart. It does look as if the market is viewing it as an element of safety, but gold as a safe haven and dollar as a safe haven, well, they generally move opposite to one another, and I think that the dollar may pip gold here. So just be careful of that. All right, let's just take a look at some of the risk markets. Let's take a look at NASDAQ first, then we'll take a look at DAX. So let's just bring up NASDAQ first. All right. Remember, there's a public holiday. So the support level is, the support level here looks intact. We've got the RSI above 50. Okay, it has moved from zone 3 into zone 2. It has a strong push on Friday. Very strange. Raj was right there, very strange. But it does look as if some reds creeping in. I would be, if the dollar, okay, this is the key, if the dollar carries on moving up, if we catch a bid in the dollar, I think there's going to be headwinds for the NASDAQ. Let's just take a look at this on the hourly. And the way that you can monitor this is just to see if there's going to be angle and separation in the EMAs. You've already got a bearish crossover in the stochastic, and the lower quintile is now in focus. If we move towards that lower quintile, I think the risk off sentiment actually hurts NASDAQ. I think it gets pushed down. Just one more, and then we'll sign off, guys. Just one more. Let's just take a look at DAX. We've gone 1 minute past the hour, so the cash market's open. So what we were looking at, I was going to say let's clear this, but let's not clear it. This is the support level that's held up. Okay, again, it does look as if there's going to be pressure on the DAX. How do I see that? Stochastics push down. The EMAs have pushed down. And I just wonder if we could make our way through to the lower quintile. And if we make our way to the lower quintile, I think the support level becomes extremely fragile then. I think that the DAX may push down. Let's just take a look at the daily chart here, and you can see that it's pushing right back into zone 3. So I expect some sort of headwind for the DAX. I think that there is heightened uncertainty. Heightened uncertainty means heightened risk. that's as far as we'll go this morning. If there's any questions, please go ahead and type those in. What's your view on gold has to fill the opening gap? From Mohan. Mohan, again, I would expect not so much the gap to close in of itself. I would expect it to be driven by dollar movement. And I think dollar moves up, and if dollar moves up, I think that opening gap gets closed. But I think the chain of causality is from dollar onwards. Does that make sense? Does that make sense, Mohan? So my preference is dollar as the safe haven over gold, subject to correction. All right, any other questions there? Okay, guys. Thanks, James. Have a great day yourself. I wish everyone a fantastic day ahead, a good evening. We shall chat tomorrow morning. Thanks very much, guys.